There's no place as exciting as the stock market. Here, not one, two, but many factors move the market's needle. Of the many, three major factors affect the market most. Number one is corporate earnings, meaning how companies are performing financially. Second, the economic and political situation of the country. And the third is global sentiments, or how major stock markets around the world are doing. They have short to medium term impact on the market. For instance, the US stock market accounts for nearly 60% of the global market capitalization, and because of this, even a small impact on large US stocks is felt across the globe. Like in 2008, when recession struck the US economy and stock market tanked there, it injected fears among investors across the world. Every stock market on the planet was impacted. India's Nifty 50 during that time crashed by more than 60% in just 10 months. Hello and welcome to our channel 5 Minute Finance by ET Money, where we talk about the basics of personal finance. In this video, we'll learn about the popular stock indices across the globe. If you are looking to understand the functioning of stock markets, you may need to track these big and popular stock markets across the globe. We'll move region-wise, so let's get started. In the US, there are three stock market indices that the world tracks. First is the Dow Jones Industrial Average Index. Investors simply call it Dow, and it is one of the country's oldest indexes. It was first introduced over a century ago in 1896. It includes 30 prominent companies listed in the US stock market. The top three sectors, financials, IT and healthcare, make up 60% of the index. In the last 5 years, the index has given an annualized total return of 11.31%. Second is the S&P 500 index, which was introduced in 1957. S&P 500 index includes the 500 largest companies by market capitalization in the US. What is interesting about the S&P 500 is that it covers approximately 80% of the available market capitalization of the US stock market universe. The top three sectors of this index are IT, financials and healthcare, which altogether make up 55% of the index. Now, speaking of the returns, the index has given a total annualized return of 15.05% in the last 5 years. Next major stock index is Nasdaq 100. Now, this is the index you would not want to miss. Known as the barometer of the world's tech universe, it includes 100 of the largest and most innovative non-financial companies in technology, consumer goods and industrials in the US. The top 5 stocks in this index are Microsoft, Apple, Nvidia, Amazon and Meta platforms. The most interesting aspect of this index is that technology stocks account for nearly 59% of the total weightage. Consumer discretionary is a distant second with nearly 18% weightage. Now, if you want to ride the technology wave, following this index is crucial. The Nasdaq 100's annualized returns over the last 5 years is 20.9%, and 2023 was one of the best years for this index in the last 10 years, rising by approximately 55%. Now let's move to the stock markets of Europe, another influential powerhouse in the global economy. The European stock market is the world's second largest after the United States. There are 45 stock exchanges in 49 countries, but only 3 are closely followed by investors around the world. The UK market ranks first, followed by France and Germany. Let's look at the primary stock indices of the 3 countries that the world tracks. First comes the FTSE 100, or Financial Times Stock Exchange 100 Index. Investors prefer to call this index FTSE. It was launched in 1984. This index includes the UK's top 100 blue chip stocks that are listed on the London Stock Exchange. While the technology stocks dominate the US indices, the FTSE has a very different composition. Here, healthcare has the maximum weightage of 13.33%, followed by energy and industrial goods and services with 12.75% and 12.02% respectively in the index. The technology sector has a minuscule weightage of 0.96% in the index. The top 5 stocks in the index includes Shell, AstraZeneca, HSBC Holdings, Unilever and BP. In the last 5 years, the index has given a CAGR of 5.4%, and in the last year, 2023, the return was 7.9%. Now comes the second largest market in Europe, that is CAC 40. CAC 40 or CAC 40 is the benchmark stock market index of France, which includes the 40 most significant stocks amongst the 100 largest stocks by market capitalization on Euronext Paris. The top 3 sectors of this index are consumer discretionary, industrials and healthcare, having a combined weightage of nearly 63%. And the top 5 components of the index are LVMH, Total Energies, Schneider Electric, L'Oreal and Sanofi. Speaking of returns, CAC 40 has delivered an annualized return of nearly 9% in the last 5 years, and in 2023 the index was up by approximately 20%. Now moving to the next major index of Europe, that is DAX. This German stock market index tracks the performance of the 40 largest companies listed in Frankfurt Stock Exchange. The top three sectors of this index are industrials, financials, and information technology, having a combined weightage of 61%. Its top 5 holdings are SAP, Siemens, Allianz, Airbus, and Deutsche Telekom. In the last 5 years, the index has delivered an annualized return of 9%. Now let's talk about the exciting stock markets in Asia. Now there are few stock markets in Asia, including the Nifty 50 and Sensex, which are tracked by investors globally. Let's look at them. First is Nikkei 225, which is Japan's primary stock market index, and it includes the stock listed on Tokyo Stock Exchange. The index is one of the oldest in the world, established in around 1950s. Again, this is a tech-heavy index similar to the Nasdaq 100, with tech stocks accounting for nearly 50% of the total weightage, followed by consumer goods at 23.69% and materials at 12.64%. The top 5 components of the index include fast retailing company Tokyo Electron, Advantest Corp, SoftBank Group, and Shin Etsu Chemical. 2023 has been one of the best years for the index in terms of delivering returns, close to 29%. And in the last 5 years, the annualized returns stood at 13.74%. Next, we have the stock market of Hong Kong. Launched in 1969, the Hang Seng Index is a benchmark index made up of the largest and most liquid companies that trade on the Hong Kong Stock Exchange. This index includes stocks of companies that belongs to mainland China, red chip stocks, the stocks of mainland Chinese companies incorporated outside China, and other HK ordinary shares. The top 3 sectors of index are financials, information technology, and consumer discretionary, having a combined weightage of nearly 72.5%. And the last one we have is Shanghai Composite, the primary stock market index of mainland China. This index includes all stocks listed on Shanghai Stock Exchange. The index was launched in 1990. Now, compared to its global counterparts, the index performance has been almost flat in the last 5 years. And with this, we have come to the end of this video. Hope you liked this video. Please don't forget to like and subscribe to our channel. Also press the bell icon for more such interesting content.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.